How are you?
I'm good. How are you?
Good. Just wanted to introduce Sam, who's a mortgage broker with Outline Financial. She and her team put together an amazing pamphlet on how to buy during the pandemic. So, Sam, can you just tell us a little bit more about yourself?
Yeah, for sure. So as Maude mentioned, I work with Outline Financial. I'm a mortgage broker there and a partner. And what we do basically is we try to get our client the best rate, but not just rate, mortgage term, advice, and structure lending based on their goals. So that's what we do.
So, what's the difference between you and going to, say, like TD Bank?
Great question. So with us, we're able to work with all lenders. We have over 30 lenders that we work with. So not just big banks, but credit unions, insurance companies, and monoline lenders. So it gives the client a lot of option versus just having to be with, say, a big bank.
Okay, amazing. So what are the biggest questions that you've had during this pandemic in terms of securing a mortgage, or if you already have a mortgage, what to do with it?
Yeah. So a lot of clients have asked things like, should I keep the current term that I'm in right now, or should I break it because I heard that rates have gone down? So we're getting a lot of those kinds of questions. We're getting questions such as, should I take out some of my equity so I have cash in case I want to buy an investment property? And then the biggest one I think would be like, I just recently lost my job.
Right.
So how do I defer my mortgage payments? Or if I just bought, how do I still qualify? So
Right.
those are like the two biggest, I think, that we've been seeing.
Okay, so from that, you and your team put together kind of like a synopsis of everything going on. So let's get into it, and we can go through it page by page. Let me just pull it up.
Yeah, sure.
Okay, perfect. So again, like you've already said a little bit about what you and your team do. Everyone knows what our team does. So we can get into the next page. So in terms of, I guess, if you're purchasing a house and you were looking pre-COVID and you had a pre-approval and are now scared about losing your job, or your pre-approval is coming up, what would you recommend in terms of this page?
So this page is talking about like you bought and now you need to sell your house.
Yeah.
And that might not be going as planned for you.
Right.
So what we wanted to talk about is a lot of times what happens is when a client purchases a property and they need to sell theirs, they typically want bridge financing. And what bridge financing is it essentially bridges you from date to date. So for example, if you sold mid-month on your property that you live in, but your purchase is closing at the beginning of the month, you may need some cash to help you for those 2 weeks, to bridge the down payment or closing costs.
So how long can a bridge finance loan be? Like, can it be for months or can it be for only weeks?
Yeah, so typically it can be 1 day all the way up to 90 days.
Okay.
Some lenders will look for longer if necessary, like we can have that facilitated. But a lot of times it's usually 1 day to, I've seen up to a month.
Right.
There's a cost involved, right?
Yeah.
So it all depends on when the purchaser that bought your house wants to close. The challenge that we're finding is that some people just aren't able to sell their house in time to meet the deadline.
Right.
So we listed some recommendations that we had. And the first one was basically trying to see if you could extend the closing date of your new purchase.
Okay.
So seeing if there would be like a possibility to change the closing date and push it out a little longer, giving you a bit more time to sell your home.
Okay.
So that was an option, because I should mention, the biggest criteria to qualify for bridge financing, the only one, is having a sold firm agreement in place on your property that you're selling.
Right. So basically, if your buyer backs over your property and you're currently in an agreement to purchase another property, that could be a bad situation.
Right. It absolutely could. So we would then recommend extending. And I think it's important to note too that unless you had a clause in your purchase agreement for the property you were buying that stipulated, maybe COVID,
Right.
then you need to close on that property, because otherwise you could face legal repercussions.
Of course. Are you seeing in that situation then bringing in like a third, like a B lender or someone like a bridge loan almost?
Yeah. So like the first thing we say is like, let's try to extend.
Okay.
Right? Let's try to extend the closing, because that's going to be the least costly on the borrower, like on the home purchaser. If that's not an option, then we try to say, okay, could we potentially talk to family members to get a gift or a loan of some sort to help us go through that, get to that next part? If that's not an option, then we try to see if there's a way that we could carry both properties.
Okay.
So refinance maybe the existing property.
Okay.
And then take out equity to have it for the down payment of the new home, as well as the closing costs. That's a little trickier to do because you need to qualify for both mortgages now.
Yeah.
And we also have to remove the property that you have off of MLS.
Right.
To refinance it. So it's not our first option, but it's something to look at. And then ultimately, if we've exhausted all of those options, then we can look at, say, private lending, which is by far the most expensive out of the former. However, it's going to be less expensive if we're going to get sued for losing potentially our deposit check or any. 100%. Exactly. Yeah.
Okay. And then I see that you have kind of like a cutoff date here of if you purchase prior to March 25th versus after. So what is the reasoning behind that?
Yeah, so if you had a firm agreement and you bought prior to March 25th, lenders are making more exceptions to someone who may have lost their job. Whereas if you buy now, we're really looking at your income right now.
For sure.
We could still look to make exceptions. However, they're few and far in between now than they were, say, prior to March 25th.
Right. Okay. Well, that makes sense. Did you have anything else you want to add before we go on to the next page?
No, I think this is good.
Okay, great. Okay. So this is a big question I'm getting from a lot of my clients who had pre-qualified for a mortgage prior to COVID, and now their pre-qualification is up. And they're wondering what they should do, if they should wait to see in terms of rates. I also have clients who purchased before and now they're like, well, should we just refinance because like interest rates look like they're going to go down?
Yeah, they're great questions. So in regards to the rates, when this all commenced, the Bank of Canada had slashed rates almost 3 times within 2 weeks.
Right.
And the fixed rates were really low at that time too. And so everyone was kind of trying to get like a mad dash to the finish line, right? To either secure the rate or see if they could break their term and get a lower rate.
Yeah.
Since then, though, what's happened is lenders are pricing in risk, they're pricing in deferrals, and they're pricing in liquidity.
Okay.
So what happened was when the rate started dropping from Bank of Canada, lenders, what they did, if you had a variable rate, if you were applying for a variable rate mortgage, is they decreased the discount. So when you get a variable rate mortgage, it's prime lending rate minus a discount. And that's all you're secured during that term that you apply for.
Sorry, what is prime lending rate?
The prime lending rate right now is 2.45. And that's what you hear about on the news when you hear Bank of Canada say, we're dropping the rate. Every lender sets their own, but in most cases, they're all on the same page at 2.45. So when that happened, the discount where it was at, say, prime minus 50 or even prime minus 1, decreased. So now you're seeing it at like prime minus 20 or prime minus 25. So it went back to what it was pre-COVID.
Right. Okay.
Okay. Even though the rate dropped significantly.
Okay.
So that happened. And then simultaneously, the fixed rates started increasing. And not because the bond yields impact the fixed rate mortgages, the 5-year.
Right. And what's the bond yield?
The 5-year Bank of Canada bond yields are what impact the 5-year fixed rate mortgage. And if you look at it, it would suggest that our fixed rate should be lower than what they are right now. However, lenders priced in, like I said, risk, liquidity, and deferrals.
Okay.
And that's why they're higher.
Right.
But we're starting to see a bit of a shift.
Right.
So they're starting to come back down, and we could potentially see them come back down a little bit more, even in the next 4 to 6 weeks. So I would say if you have a pre-approval that you secured in March, write it out because it'll likely expire June or July.
Right.
And then look to renew it then.
Yeah.
And if you have a mortgage where you're like, my rate is higher.
Right.
There, the challenge is we need to see if it makes sense for you to pay out the penalty that you're going to incur to break the term, to refinance and get a lower rate. And if it does, and all the numbers work, then it's also a great idea.
Are you seeing that a lot, or are people who with pre-existing mortgages kind of just waiting to see what happens?
I have been seeing it quite a bit.
Yeah.
If it makes sense.
Right.
Clients are doing it. Like if there's an opportunity for them to save 20 or 30,000, they're absolutely looking to do it. Or even if it's a possibility to reduce their monthly carrying costs to give them a little bit of extra cash flow.
Right.
I see clients doing that as well.
Okay. And then I guess in terms of back to like pre-approvals, are you seeing most people sort of just waiting to see what happens in June, July, or are people are you still having clients who want to like re-up their pre-approval right now?
Yeah, absolutely. And I've had clients who we did pre-approvals in March and then now their situation has changed.
Right.
They might be on reduced income. So they're still working, but they might be earning 75% versus 100% of what they were earning months ago. And so now they want to be requalified. So I have seen clients who, if they feel that they have job stability, that they see this as an opportunity to still buy.
Right.
Because the demand is lower now. Because prior to all of this, it was crazy, right?
Oh my gosh, it was the most insane market ever.
Right.
Yeah.
There's so many offers on so many properties.
Like it was normal to have like 40 on a property. I was talking to someone yesterday and they were like, a deal right now is not being in a bidding war.
Right.
Like, yeah.
Yeah. And I absolutely agree. It's not, and I still have seen some clients bid on properties where there are multiple offers still, but not to the point where there were 10 to 15. Now I'm seeing 2 to 4, which is still much better than what we were seeing prior to all of this. So I do still have clients that are trying to capitalize and get in if they can.
Okay. All right. Well, let's go on to the next page.
Yeah, for sure.
Okay, so this is really, I think, important because that's a question I get from a lot of my clients about appraisal, because they're scared that if they purchase now with an unconditional agreement, so let's say in a multiple offer situation, that they will have a big gap to fill if the property doesn't appraise.
Yeah. So, and that's a fair concern.
Yeah.
Appraisals have changed since this situation has happened. Most appraisers don't want to go into properties right now.
Right.
So what they're doing is they're walking the perimeter of the property, they're taking photos of the outside, and then they're relying on the seller to either share photos of the interior, share dimensions of the interior, and they're spending anywhere from 30 minutes to an hour on a phone call with a seller, just getting all the details of the property.
Right.
If there was a virtual tour set up, they'll utilize that as well to help with the appraisal. So the challenge then becomes you're not having someone visually see the
Right.
property for themselves. And the other challenge becomes that since demand has dropped,
Mm-hmm.
there's less sales happening.
Right. There's
And
less comparisons. Yeah.
exactly. And an appraiser relies on comparables to determine the value.
Mm-hmm.
So it's important for us to work with the appraiser, to work with yourself, to ensure that there are comparables that will support the value.
Right.
Now, the question that we're also being asked is, should I do the appraisal right away or should I wait closer to my closing date? And I would say that if you looked on a street and you had, 3 houses listed, or within that same proximity, there were
Mm-hmm.
3 or 4 houses listed, but they haven't sold, then perhaps we could wait to see how they sell. And if they get a fair market price and they're something we can utilize, then sure. But if we
Right.
have good comparables now, I would always recommend doing it sooner than later.
So when you say like comparables and having the appraisal done, could the seller potentially do the appraisal before they put the house on the market and then the buyer could use that appraisal?
That's a great question. You could, but you're risking a snapshot in time.
Right.
We don't know which comparables that appraiser is using.
Right.
So you're risking a snapshot in time that could be different than the time when your client purchases,
Right.
right?
So I guess what is the best case scenario and what is the worst case scenario with an appraisal right now?
So best case scenario is you get the appraisal completed and it comes in right on the purchase price.
Yeah.
Which would be, the best possible outcome. Worst case scenario, it might appraise for a little bit less. And then
Yeah.
at that point, the client either can put more money down to keep the structure the same if they want, or we can look to alter the structure. And it depends on the purchase price of the property and the client's affordability and
Right.
whether they qualify, but that's something that we could absolutely look at.
And what are you seeing right now? Like in terms of like the majority of the deals that you're processing?
So I would say with a lending, so if you're traditional lending with either a bank, a monoline, or say a credit union, I've seen the appraisals still come in at value.
Okay.
We're seeing a little bit of a decline in the appraisal value is definitely with B lending.
Right.
And that was already the case prior to COVID.
Yeah.
So now it's just become more prominent.
And what's happening with CMHC insurance?
So in what regard? Like it's
So
still
is it still the same, or is there a higher premium now? Or
Oh yeah, that's a great question. Everything has remained the same.
Okay.
Yeah, so there hasn't been any changes on that front.
And then can you just explain a little bit about what that insurance is?
So anytime you purchase a property and you're buying with less than 20% down payment,
Mm-hmm.
you're required to get mortgage default insurance.
Right.
It's a government requirement. And so what it means is you're charged a premium based on the loan amount that you're taking.
Right.
And that premium is added to the mortgage.
Right.
And you make your monthly payments based on your total mortgage amount plus this premium. And
Right.
the premium ranges because it's tiered. So if you put 5% down, it's one pricing. If you put 10% down, it's a different pricing. And you don't have to pay it up front, so that's good news. It stays within your mortgage. But there is PST on the
Right.
premium that you need to pay as part of your closing costs. So that's an upfront cost.
Okay. And then I guess like if you had a crystal ball, do you think that going forward in the next like 6 months, like if we're really looking ahead, that people are going to be purchasing with putting less money down, or do you think that the standard 20% will still be in effect?
I don't think that they're going to ease up on the rules.
Yeah.
So I think that we will see similar lending guidelines that we've seen over the last few years in terms of down payment requirements. But it's hard to say. I've been working for a while in mortgages, and so there was a time that we had 40-year amortizations,
Right.
and we did refinances at 90%. So could that come back? Potentially. I don't foresee it in the near future, though.
Yeah.
I don't think the government's going to ease up based on what's happening right now.
Okay. And do you have anything else, like in terms of things that, like a prediction that you see with the market, or are you thinking that things are just going to stay as is?
I think we're starting to get used to our kind of new normal.
Yeah.
So I think that once it kind of digests with everyone, I think we'll see this as the new normal. So I think we'll see less visits to properties unless you're really serious about it.
Yeah.
More virtual meetings happening, more virtual tours happening, where potentially we could see, I think that if confidence comes back from the consumer and people start working again, I think we could see the market stay strong. I don't know if we'll see it increase as much as we've seen it in the past, but I think it will remain strong and stable. I don't foresee it going down.
Yeah. Not anytime soon. Darn.
Yeah, I don't think so. Not Toronto. Toronto's a pretty resilient market.
Yeah. I almost think that like people are going to be so over being in such an urban, like tight area that I think that the big boom is going to be in the suburbs next.
Yeah, I've actually heard that same argument that people want their space now.
Yeah.
Right. Yeah, no, for sure. It'll be interesting to see what the next year holds.
Yeah.
I think it really depends on everyone's employment situation too.
And I think that just while we're finishing this off, I just think it'll really depend on how companies structure their offices, because if you don't have to be in your office all the time, and that's not the new normal, then the need to be in like a king class condo within walking distance of the office, there's not going to be that kind of need. So I don't know. We shall see.
Yeah, there has been talk that commercial rental spaces that likely companies will downsize because they'll realize that they don't need such big spaces if they're going to have half of their staff working from home.
Right. I don't know.
It'll be interesting. We'll timestamp this and then see. I
know, right? We will revisit in 6 months. Okay, well, thank you so much.
My pleasure. Thank you. It was nice seeing you, even if it's virtually.
Okay, bye.